Hey, everybody, and welcome back to another episode of the Indy Investor Pod. Excited to have you on here and excited to talk with Lauren Perry today. So, just an awesome lady. I enjoy really talking to you and get to know you a little bit every time we get to talk and things. I feel like we always talk about, oh, we need to get together and have coffee or have lunch, and it never works out time wise or anything like that. But just really appreciate you, Lauren, and excited to have you on here. How you doing today?
I'm doing well. Thanks for having me back.
Awesome, awesome, good stuff. So I'll put a little disclaimer in here as well. I am still traveling, so if anybody hears any street noise or anything going on around me, I apologize, but that's what we possibly might be dealing with today. So, all right, Lauren, before we get into the episode, I would love to know what's some good news that's going on in your life right now, personal, professional. What's going on? What's some good things that are happening?
Always good things to talk about. No, I think on the real estate side, I'm excited that we're starting to get some of our Avon units leased up. So I bought an
Nice.
8-unit townhome property that was in real rough shape back in January of this year, and that rehab has come with its fair share of hiccups along the way. But yeah, finally getting those leased out, and it's good to have money coming back in instead of going the other
There you
direction.
go.
So
Always good
that and
stuff. So yeah,
yeah,
congratulations on that. So
my
that's
little
great.
guy is he's also started football, so personally we're spending a lot of time on the field, and that's been fun to watch the seven year
There you
olds run
go.
around and
Nice. Love
hit
it.
each other.
So
uh,
I'm getting super excited for football season and things like that. So, and actually by the time this airs, it'll already be football season. So Lauren and I will be very excited about that. So
that's right, yeah,
good
I'm
stuff.
I'm getting an education.
There you go. So if you don't know Lauren, so Lauren is a West Coast investor that moved out here to Indianapolis just under about 2 years ago, almost 2 years ago now and stuff like that. So from Portland, correct?
Eugene, a little south
Eugene.
of
So a little,
the
yeah,
crazy
there
stuff
you
up
go.
in Portland, but
There you
yeah.
go. So awesome. So she's been out here for almost 2 years now and things. So I'm doing some flips, doing some buy and holds, looking to get into some short-term stuff and also getting into some Terre Haute stuff. So we're gonna dig into a lot of that today and things. So Lauren, let me just ask you before we start trying to kind of breaking this down a little bit, like what's been one of your biggest takeaways from just the Indianapolis market and just and doing real estate full time now and just everything like that? What's one of your biggest takeaways from just your position from before you moved out here to right now?
I think, you always learn more about the neighborhoods when you're closer to the
Yeah,
action, but I think more than anything, the power of relationships continues to just be driven home for me.
yeah,
And that's been easier to grab coffee and go out and do those
yeah,
things now that I've been in town. But really, this is just such a tight knit community, and everybody knows everybody. So, referrals, shared experiences, networking. It's just it's been great, and I
yeah,
haven't seen this in the other markets that we've invested in. So it's been really fun to
yeah.
be part of it here in town.
Yeah, awesome stuff, and thank you for contributing to that. So every time I hear your name, it's mentioned in very high regards, and I feel like you are a
Uh,
true go giver for the Indianapolis investor community. So thank you for that. So let's talk a little bit about let's start with so you have been doing so you have some buy and holds. And you've had them, with some property managers and things like that. I think you've been trying to find like which property manager works, and you just decided
mhm,
to, hey, I'm going to go ahead and try this on our own and go ahead and self-manage these. So let's talk about
mhm.
that a little bit of like what have you, I know you're just starting to get into that and it might be a different conversation 3 months down the road or 6 months down the road, but what are some things that you've learned so far from taking on that and basically just kind of being that, hey, go-to person and self-managing those properties?
Yeah, well, it wasn't really my intention to self-manage, at least
Yeah.
not this year. It's definitely crossed my mind. But after a couple of experiences where I just wasn't quite finding the right fit for what we were looking for, I realized, you know what, I'm so active in our rehabs right now, and I have some great contractors that I can lean on to do different things. The scary parts of property management for me felt like, okay, well, I've kind of got those boxes checked. I've got some folks that I can lean on when it comes to maintenance requests and things like that. And,
Nice.
speaking back to that community and everybody sharing information, there are some people that are self-managing their own portfolios that have shared a lot with me, former property managers that are willing to kind of consult as needed. And so
Yeah.
I just felt like, you know what, I've got the resources I need to try this. I'm an intelligent person. Let's go
There you
try it
go.
out. Because for me, I'm one of those people that tends to learn best when I can be hands-on. And
Yeah.
it doesn't mean that I want to be hands-on forever, but really kind of digging in and getting my hands dirty a little bit to figure out what are the pain points in this process, and what might I need to look for in the future if I do want to partner with another management company that are going to be key to me. And I think, every investor has slightly different priorities and things that they're trying to accomplish. And I think one of the things that I realized for me was that I come from a service background. In my, former W-2 life, I worked for a retail company that prided themselves on service. And I've always thought of my rentals not just as, a property that I'm invested in, but this is really a service that I'm providing for the community, and these tenants are my customers. And I think, for me personally, being able to manage them, my portfolio isn't so large right now that that's impossible. It's really been helpful to form some relationships with these tenants and have a little bit more of a personal touch to deliver the service that I, would like to, as this being part of my business. And also, I think having that little bit more of a human connection with the tenants themselves has helped them to be more reasonable in some of the things that they're expecting and requesting, because we're just people talking to each other about what we both need, and that's been a great learning experience.
Yeah, I love that. I think it's just such a great way to approach things like property management, and then just things like that, and just business in general. When you approach it from the customer service side of things, things just tend to work out a little bit better, a little bit nicer, a little bit neater, and things like that. There's a little bit more grace that's involved when there's the customer service aspect thrown in there and things. So that's awesome. Great job on that. I will with the property management and bringing on and starting to self-manage, has there been anything so far that's popped up like, oh my gosh, I didn't think about that, like I didn't expect that, or I didn't think about that, or is there been any of those instances so far?
I think I knew in the back of my mind that it's possible for things to go wrong on weekends and evenings, but I didn't realize that they always go wrong on weekends and evenings. So if there's anybody out there that does after hours random maintenance calls, please let me know. But that's something that I'm trying to solve for a little bit. I think, it's also been eye-opening for me to just get to know my properties a little bit more, because they're, my duplex, for example, it was the very first property we bought. It was sight unseen when we were still on the West Coast. And, now that I'm here, I'm realizing, like, okay, that was deferred maintenance that, we maybe weren't aware of. Now I am aware of it. Now I need to consider, okay, this is probably going to be an ongoing issue with this property. Is this the type of thing that I want to continue to have to troubleshoot and manage, and the numbers still work and the time I'm investing in it still makes sense? Or maybe this property has served its purpose and it's time to trade that in for something that, knowing that I'm going to be managing these on our own, maybe there's a different type of property that's a little bit better fit for us in the position we are now.
There you go. Let me
looking at them from a different angle.
Let me put you on the spot on that a little bit, like knowing. So when you were investing, when you're out in Eugene and investing from there in Indianapolis, when you were that remote investor and things like that, like a property like you're just talking about now, like, would you, knowing what you know now, would you have bought it 2 years ago if you knew what you know now? And kind of maybe the advantage, disadvantage of, when you're looking at that as an out-of-state investor, of kind of how that looks. Maybe you're just ready to level up and like, oh, it's still a good property for us, and we're just ready to level up and try something else. But if you kind of look at it like, knowing this, like, would you have still made that same decision when you were out on the West Coast?
This particular property, we picked it up for $40,000, and it's one of those that's great cash flow, on paper. It's I think it was a pretty low risk investment at the time, and it got us experience in this market. I mean, I was terrified to buy that $40,000 house at the time, and we've got a lot of nice equity in there now, and it has cash flowed for us. Just, as I'm assessing, all right, now that I'm going to be managing these ongoing, this is a property that we just, I can expect to have turnover every single year. I can expect to have some noise complaints. I can expect to have some complaints about the neighbors. Those are things that I can try to set the right expectations for up front. And I think tenant placement is key in that. But there are some things that I'm not going to be able to solve for. I can't solve for, the guy with the loud car a block over, and the barking dog, and the types of things that just tend to be commonplace in this particular neighborhood. And so this one might be one where I go, you know what, I'm going to, thank the house for its service, and let another investor take it on as maybe their entry property. And
So
And level up. I like that term.
there you go. Yeah. Yeah. So level up. So no, I love that you put it through. It's been a learning experience of like all the little lessons you've learned from that and things like that. I was just when I asked that question, I said I'm putting you on the spot a little bit. I was kind of putting myself on the spot because I didn't want the answer of like, no, I definitely wouldn't have done it. I love the fact that you're like, yeah, this is like we learned from it and it was a good experience and it got us into the market because
Mhm.
sometimes it all kind of starts off that first one, two, up to five properties. We're like, hey, we're just trying to figure this out. Let's get some under our belt and get this going and things like that.
Mhm.
So I love your positive attitude towards that and stuff. So great. I want to ask you because I know you have another duplex right now that I think it's outside like maybe the Fountain Square around the Fountain Square area that you are going through the process of getting it rezoned to turn it into townhomes,
Mhm.
which is pretty cool and pretty exciting for that. So what has that process been like and how's that going?
Yeah, so this is one of those projects that has gone sideways a couple of times, and I think it's also one of those where in the end it's probably the best thing because I started off where I was just going to renovate this duplex kind of as minimally as I could, still make it nice inside, but not do anything too major structurally. And I started off with a contractor that ultimately ended up filing bankruptcy before they completed
Oh
the
wow.
project. So, that's not ideal when you lose your contractor in the
Yeah.
middle of a big rehab, but kind of working through the outcome of that, I ended up getting connected with a local architect that has a ton of knowledge in this area. He identified some things where the permits hadn't been quite pulled the way that they should have been.
Okay.
So, it was good that we identified that while everything was still open and it was easy to fix. And then, in the course of really looking at how do we want to address these things, we said, this is zoned and it's actually zoned commercial currently. So we needed to
Okay.
get a variance or something anyway. If I'm
Yeah.
going to go to the effort of getting a variance, why don't we just go ahead and actually do the work? Even though I'm going to hold this property in the short term,
Okay. Yeah.
let's do the work now to make sure that the walls are fire rated and things are permitted in a way that will allow me to sell these as individual units down the line. So, it really, as far as drawing up the plans and everything, it hasn't been all that different than any single family home. The
Yeah.
only real difference has been accounting for, the need to get a survey so that we can subdivide the lot at the time that I go to sell it, which I'm not going to do in the immediate
Yeah.
term anyway. So I've got a little bit of leeway on that. And then,
Yeah, that was going to be my question for you, like what your plan was of that, whether it's going to be, hey, well, hold it and rent both of these out for a while, or hey, I'm going to do this to sell them off, and basically have two
mhm.
assets right there and stuff like that. But your goal was to hold it for a little while.
It is, yeah. I think it'll cash flow decently as a long-term rental. It also might be an opportunity just since it's in the Fountain Square area. I know we're getting a little saturated maybe with
Yeah,
short-term rentals around there. But maybe I'll do one of each and see how it goes. But yeah,
there you go.
for now it's I think going to be a good property for us to have in our portfolio once the rehab's done. And then long term, we've got that option to sell them off as individual townhomes, which would definitely
Yeah, nice.
be a good return for us if we can do that.
Love it. So I'm gonna ask you this is because I know you kind of do a little bit of both. So you've been flipping properties. You also have some buy and holds and things like that. What do you prefer? Where does Lauren like her? What does she like to do with her for investments? Where do you belong, Lauren?
I don't know. I mean, it's always exciting when you get to go cash that big check at the end of the day, but I've definitely over the last year, I left my W-2 job at the end of 2020, and I think I probably put some pressure on myself to try to replace more of that income on a short-term basis,
Yeah.
which kind of steered me towards flips last
Right.
year.
Yeah.
And the market was so strong,
Yeah.
it's pretty tempting to go ahead and take that 30,000 over ask offer.
Yeah.
um, when it's been on the market for a week or something. But our goal when we started investing here was to buy cash flowing real estate that was going to serve as a long-term tool to build wealth and retirement for ourselves and something to pass down to our kids. So
Yeah.
my favorite is when we've got a property that we were able to take from something that was gross and needed a lot of work, put in the work to actually make it a nice habitable property. So we're proud of that work that we put into it and what we turned it into, and then getting to keep it and see that it's a nice home for somebody else while we're seeing the checks come in. I mean, that's always my preference. But
Right. Yeah.
yeah, sometimes you've got to resist the temptation to go ahead and sell it when those offers are coming in. So
Yeah. Let's talk about that. How do you how do you do that of when you know, like, oh man, I could probably sell this thing right now. We can make 30, 40 grand on it. We've done a great job with this. Or,
Mhm.
hey, we, this is, we need to hold this and things. Is it just is it a numbers game for you? It's just like, hey, do you go into a property, like, do you buy a property knowing like, hey, this is for a hold or this is for a flip, or do you buy it, renovate it, and then see what the best option is? Like, how do you go about that analysis for yourself?
Well, when I buy a property, I always try to have at least two exit strategies.
Nice.
So,
Yep.
I'm not stuck with it if it turns out it won't sell, or vice versa. If I decide, you know what, this one's going to be a headache for whatever reason, I don't want to hold on to it.
Yeah.
So I try to give myself options. Like I say, over the last year, the market was just so strong.
Mhm.
While we're in the midst of rehabbing a property, I've got neighbors stopping by asking me, when are you going to put this on the market? I've got a friend that wants to buy in this neighborhood. Here's his number, so um, I generally have an idea of what we want to do. I just try to leave the options open.
There you go. How often does it fit on it? What percentage do you are you on the money with what you're doing?
I'd say maybe 60-40. I
Okay, that's
definitely
not
can
bad.
change
Yeah.
my mind, but yeah, I mean, we've got one that is just around the corner from our house here that I bought as a flip, and once it's done, it's going to be so cute and it's going to
Yeah.
cash flow, and I'm like, why would we sell this thing? I
Yeah.
kind of like this one.
There
So
you go.
yeah, I don't
Nice.
know. My husband tells me I shouldn't get too attached to his
Right.
houses,
Yeah.
but
Well, you
sometimes
throw
I
in
do.
there's always the cuteness factor that maybe you can't
Right.
quite analyze, but yeah,
I
yeah, I got it.
know.
So
Yeah, I mean, I guess I am leaning more towards with these older properties. If I don't know for sure that I've replaced the sewer line, I've
yeah,
replaced, some of the major components that could go wrong down the line, I'm more inclined to sell those now than maybe what I was a couple years ago, just because
yeah.
I've seen what the maintenance can be on those. And,
Hmm.
whereas a 1970s brick ranch, I'm pretty safe once I've
Right. Yeah.
updated the major systems, and I know that one's going to perform well for me. So
Yeah. Nice. I know you just, you mentioned and that you left your W-2, almost 2 years ago now and stuff like that. I just did an episode with Brooks Rothschild, and he's about 6 months into leaving his W-2 and things like that. So I want to ask you, how's it going? Like, was that like, oh man, no, don't look back. I know I've been out of teaching for 5 years now. People ask me all the time, like, oh man, do you miss teaching? I'm like, not even a little bit. Like, I love what I'm doing. So is that the same thing for you? Like, hey, that was definitely the right move for you to get out of the W-2 and get into this, and you're it seems like obviously it's going pretty well for you and things like that. But any thoughts on just what that transition has been and kind of where it stands today?
Yeah, no, I can't say for a second that I
Yeah,
regretted moving on. Now I'm probably a little bit spoiled because my husband has a great job. He's been very supportive. So, I haven't had that, you know, urgency around you've got to like make a quick buck here. So I've been fortunate to be in a position where I could, kind of have some training wheels on and make
yeah.
some mistakes, and it wasn't going to sink us. That said, I'm a competitive person. I
There you
want to
go.
make
Yeah.
sure that I'm pulling my weight here. So yeah, no, I spent 23 years working for the same company, and it was a
Uh,
wonderful company. I had lots of opportunities to move and grow, and I had a great career there. But I think stepping away from it, I didn't realize how little freedom I really had in terms of kind of controlling my own destiny, controlling my own schedule, being there for my family. And there there was stress there that I didn't even realize I had
yeah.
until I was out of it. And now I certainly have stress because owning a business and being an entrepreneur is its own set of challenges. But I really do enjoy having the ability to really directly influence my my success, my failure. If the failure
Yeah.
happens, I know that it's on me. Like there was something I did or didn't see or didn't address that led to a certain outcome, and I need to learn from it and move on. And um, I don't know. I love it.
That's awesome. That's
I
great. So
can't imagine going back to a job where I have to ask for a week off to,
yeah.
go hang out with my kids over Christmas and hope it gets approved and that kind of thing. That I
Yeah.
don't miss that at all. I
Yeah.
miss I miss some of the structure. So that's
Okay. Yeah.
some of what I'm just trying to kind of force into my own life a little bit, just to keep me on track a little bit better, because you don't have anybody looking over your shoulder. Got to do
Right.
that
Yeah.
yourself.
It's on you and stuff. Yeah. So
Yeah.
no, and that's like your calendar is open and you kind of set your own schedule. You set your own calendar unless you get a maintenance call now that you're self-managing, 3 o'clock in the morning or something. But
Yeah.
other than that, like that's it. That is important too, because I feel like a lot of people miss that of, when you go into the office and you leave the office and stuff like that, it's awesome to have that your calendar opened up and I'm set my own schedule, but also where it is that structure. Well, oh, wait, who's nobody? Oh, I'm going to sit here and watch another episode, or hey, I'm going to listen to this podcast. It's those things that can easily pop up and things. So how do you deal with
Yeah.
that? Of like, man, you mentioned you're a competitive person. Is that what it comes down to? Just like, man, I just want to be awesome and I just want to keep rocking it out for yourself, or what is that push for you to basically like, hey, yeah, I need to stay on top of myself. I need to make sure give myself the structure to be successful.
Yeah, no, I think that's a lot of it.
Yeah.
I don't like to lose. I don't like for things to go wrong and it to be on me. So,
Yeah.
um, yeah, I feel like, fortunately I've got some background where, we did strategic planning, we did time management courses, and I was responsible for a lot of that. So now it's just a matter of disciplining myself to actually follow what I already know to do.
Right. Yeah.
And,
Yeah.
I'm a little bit old school. I've got my written planner, I've got my whiteboard out, and my husband mocks me a little bit because he's in IT, but I'm like, hey, it
Yeah.
works for me and it keeps me focused on my big three if I'm literally
Yeah.
staring at it across on the
There you
wall.
go. Yeah. If he's IT,
And
he's probably got his app to do whatever. You got your whiteboard. It all works out.
I
Right. Yeah.
know, I
Yeah.
know. I'd say, one of the things that I struggle with a little bit is that with real estate, there's so many different things to do and to learn, whether it, long-term rentals, flips, short-term rentals, and, trying to make sure that I stay focused on what really is the bigger term objective here. What is the best tool in the tool belt right now to try to accomplish that? And what might we need to table for 2023 or 2024? Because
Yeah.
that's, a fun goal to work towards, but maybe I shouldn't be focusing my time on a condo in Hawaii right now when I've got 4 active rehabs going on
Yeah.
here in
Yeah.
Indy that, we're kind of in a place where I need to move those forward.
Yeah.
So,
Well, on that note, you're adding a new tool to your tool belt where you are getting into the Terre Haute market now as well,
yeah,
and starting
yeah.
to do maybe a short-term rental out there and things.
Hmm.
So it sounds
Yeah.
like you're being conservative, but you're still pushing, which is good. Let's
Yeah.
talk about that a little bit. We talk about Indy, obviously the Indy Investor Pod. We talk about Indy a lot on here and stuff, but I want to get your impressions of Terre Haute. So I know that you pick up your first property out there and things like that, but what are some things just
Mhm.
about Terre Haute that maybe you didn't realize once you actually got out there? And I'm sure, I know you went out there with Alicia, and Alicia, she loves Terre Haute. That's her Terre Haute girl and everything
Yeah.
like that. So once you got out there with her and really started to see things, what are some things that you now know about Terre Haute that you didn't know before?
Yeah. Terre Haute is a adorable little town, and it's not even really that little. So
Yeah.
before I had a chance to go out there, in my mind it was going to be some, small kind of, you pull over to fuel up on your way to somewhere else type of a town with a diner or two. And that just, that was my own ignorance. That wasn't anything to do with
Yeah.
the town. And then when you get there and see that, what they've got a university there, they've got a big hospital, they've got a thriving community with all
Yeah.
the chain restaurants and everything that you might think. They've got an airport, they've got nice homes, not so nice homes. It's a city just like anything else. So
Yeah.
it was definitely a worthwhile visit to go out and see it firsthand. And like anywhere else, there are pockets that you probably don't want to invest in unless
Right.
you've got
Yeah.
a very specific strategy. But going back to what I was saying about, refocusing on what is the big picture objective here, when we got into investing in the Midwest, it was always to find cash flowing long-term assets that we could hold on to. And that has gotten more challenging over the last couple of years to find things in Indy that work for what we're looking to do, and maybe aren't the type of properties that are going to cash flow on
Yeah.
paper, but
Mhm.
not be ones I want to manage. And finding this first house in Terre Haute, I was excited because I was like, what, this is kind of these are the numbers and the type of property that I remember seeing just a few years ago
There
here
you
in
go.
Indy that were a dime a dozen, and you could find them all the time.
Yeah.
Where you have to hunt for those a little bit more in Indy right now, and Terre Haute still has those opportunities. So yeah, we're going to see how that market goes. And would like to hold on to this one and see how that goes, and hopefully
Nice.
find some more if it works.
And you're gonna try short-term rental with this first one, right?
I
So let me let
am,
me
yeah.
let me pick your brain about that a little bit, because I didn't think of it like, I'm kind of one of those people that was a little bit biased of Terre Haute in the past. I've been out, I've seen it enough like, oh yeah, it's a great market. Like I want to, you can invest in there and people can do well there. But honestly, I haven't thought about short-term rental out there. So
Mhm.
let me pick your brain a little about the mindset behind, hey, let's try it out there, and I think it's going to work, and you feel pretty confident in your numbers and things.
Yeah, so I'd been thinking about converting a couple of our Indy rentals to short term, and just kind of waiting out the leases on those. But in the
Yeah,
meantime, I do some staging and things, so I've got quite a bit of furniture that's just been sitting idle, and I've got this cute little house that's ready to go. And I thought, you know what, let me just research the market a little bit and see what the opportunity might be there. And I was pleasantly surprised with some of the AirDNA data on what the projected rents were there, and had spoken with a couple of other investors that I know from Indy that are trying some short-term rentals there, and they were surprised by how well theirs were going. So I
yeah,
think, I don't know if I'm going to end up building a huge short-term portfolio there, but it's got a hospital, it's got the university, it's got the convention center that was recently built. I think they've got a casino coming in at
yeah.
some point.
Mhm.
So there are some things that are bringing people to the area, and there really isn't as much inventory for short-term rentals as what Indy certainly has.
Yeah,
So it's pretty, since I've already got the furniture, I've already
yeah.
got
There
the
you go.
house, it felt
So
like a kind of a low risk
there you
thing to
go.
try out. And then if it doesn't work, I know it'll cash flow as a long-term rental too. So
Yeah, perfect storm. So I want to ask you this, because when you mention things like that of like, okay, I've looked at the numbers on AirDNA, and oh, I have my staging furniture. It's not being used right now, so I can put that in there and things. So for me, from kind of knowing you a little bit, and our conversations, like you seem very strategic in your thought process and what you're doing. And everything that you're doing, is that the same? Do you view yourself as that? Is that what works for you, or are you the duck above the water and just paddling like crazy underneath? Or what is it about you that is making you do so well and be successful with your investments? Is it the strategic planning behind it? This is
I
your
mean,
chance to brag about yourself a little bit, Lauren.
generally, yes. I think I am a strategic person, and that
Yeah,
that was one of the strengths in my prior career, was being able to kind of see the big picture and figure out how are we going to get from point A to point B in the most efficient way.
yeah,
That being said, I certainly have my moments where I feel like I'm paddling furiously under the
yeah.
water, and I think sometimes that's just because I tend to say yes maybe more often than I should, whether
Okay,
it's
yeah,
and sometimes it's just in an effort to be helpful. I'll take a consulting thing that maybe I don't technically have time for right now.
right.
So I'm trying to kind of get a handle on my calendar a little bit that way, and just make sure that I've got time carved out for those big rocks, and make sure that those are moving forward while I fill in with these other things. But no, I mean, I think that I haven't been afraid to try different things, and even the things that haven't worked as well as I might have hoped have definitely taught me something.
Yeah,
So um I I don't know. I feel like I'm trying to be strategic, but I'm also trying to see opportunities as they come my way, and seize those where I can, even if it wasn't necessarily part of the master plan, because I've seen some of those things work into. It's just a matter of, making sure that I'm not overextending myself and
yeah.
having too many different irons in the fire, so that I'm keeping a close eye on the things that are most important.
Yeah, no, I love it. It's one of those things that I think, as people are leaving their W-2s and getting into things like this, is we always have to come back to, we have to remember like what our transferable skills are of what we were able to do in our past and what made us successful in our past, and be able to bring that in. And it sounds exactly like you're doing that. I feel like when people are trying to be somebody else, if Brian Snyder goes into Terre Haute and tries to be Lauren Perry out there, it might not work out well for him. But what does Brian Snyder do well? And let's put that in there. And I feel like you're doing a great job of that. So just awesome stuff, and just a business lesson for everybody to kind of take and put that into their businesses out there. So thank you so much, Lauren, for that. I do want to ask you one other thing before, one last question before we kind of wrap up and get you out of here and things. But you're going through, I think you said, your first like kind of conventional refinance right now. And I know a lot of people, maybe they struggle with that of like, oh, who do I go through? What do I need? Like that kind of thing. It seems like a kind of an ordinary thing of like, oh yeah, I have my house that I live in, and I'm just going to go to my bank and I'm going to refinance it. But when we're talking about investments, it's a little different and stuff. So just any advice or any tip that you have for somebody out there that's maybe going through that conventional refinance, of just things that they maybe something that you didn't know of, like, oh man, I need this, or I didn't do this, or what's some just tips that you have for everybody that's going out there or that's going through that right now?
Sure. Yeah, it's definitely the first one I've done in a while, because it seems like over the last year, most of our acquisitions have been through private lenders, hard money lenders. And now
Yeah.
that I'm getting ready to refinance this 8-unit property that we're holding on to for a little while, yeah, just working with a normal bank again, I kind of forgot for a minute what they were going to require in terms of tax returns and W-2s and all of the schedule of properties, and since the last time I've done this, our portfolio has scaled, and our business entity structure is a little more complicated.
Yeah.
So, yeah, it's just, I guess, an exercise in patience and organization right now to get my
Right.
ducks in a row, and it's prompting me to have a little better system for organizing all of my documents, so that I've got somebody helping me part-time with admin stuff.
Nice.
I might know where to go pull this form, but it's not easy for her to help me with some of those things. So,
Yeah.
yeah, just on the front end, getting a list from the bank of, give me everything that you might possibly need so that you
Yeah.
can start to work on pulling that stuff together. And I guess just be patient in answering their questions. I'm actually in the process of putting together a slide deck to just kind of explain who I am, what is my company looking to accomplish, what properties do we own, what's the strategy around each of those, because those tend to be questions that I'm getting from each of the banks that I've been
Yep.
talking to, even kind of high level, having conversations to try to figure out which lenders I want to work with longer term. So yeah, just almost putting together a little bit of a marketing
Nice. I
deck
really
around
recommend
me
that
and
because
my company, because
yeah.
yeah, they don't know me and
Yeah.
I'm coming to them asking for money. So
Yep. And your business looks different than Alicia's, looks different than Brian's, looks different than like everybody's looks a little bit different. And you just say like, oh, I'm in real estate. They're gonna in their mind they're gonna put you in a box, but
yeah.
everybody's company is a little different. So I love that tip of what you're doing there. I think it definitely would help you out and help a lot of people out by doing that and things. So
Yeah. And I think if this is something that investors are going to need to do on an annual basis, just having that kind of in your calendar for first part of the year, end of the year, when
yeah.
things might be a little slower, just let's gather all our documents so that we've got the 2023 file ready to go for those lenders as they're asking for this stuff, and send them the link, and then it's no stress. But
Yep.
unfortunately I hadn't done all of that for this year, so I'm pulling it together now, and I'm gonna make
Yeah.
sure I'm more organized moving forward.
Yeah. Those are the things we always tend to put off a little bit because we're worried about like, hey, we need to acquire this next property and
I
things, but
know.
still it's still important. It can still drive the business. So good stuff.
Yeah.
Lauren, what's something that you're reading or listening to or something that you want to recommend to the listeners out there, something that might help them out?
Gosh, well, I mean, the Indy Investor Pod always, but I'm trying to think real estate related. I mean, I'm on Bigger Pockets all the time.
There
I'm
you go.
pretty active in the Indy
Yeah.
forums. I really enjoy just kind of following Brandon Turner, and
Yeah.
I've read most of their books over the last few years. Nothing too specific. I like to follow Jay Scott, especially right now as the economy is turning a little
Yeah.
bit. He
Hmm.
he usually has more of a data focused view on things. So it's nice to get anecdotal feedback from people, but it's also good sometimes to get grounded in, okay, what really are the numbers telling us? What
Yeah.
is historically, what do these things indicate, and how might I just need to factor that in? I'm, not trying to panic or anything,
There
just
you
trying to
go.
have those things in the back of my mind. So
So good stuff. Lauren, if somebody wants to reach out to you, find out more about you, or just connect with you, what's the best way for them to reach out to you?
sure. Lauren Perry, you can find me on Facebook. My Instagram handle, I'm probably most active there. It's Helix Real Estate, with the little underscore things between. And yeah, you can reach me at lperry@helix-company.com too. Anybody's welcome to email me, and happy to chat with anyone.
Awesome. Well, thank you so much for joining me. Really appreciate you. And thank you so much for all the tips and all the insights that you provided today. Great stuff. If anybody needs anything from me, don't hesitate to reach out at brian@simplewholesaling.com. More than happy to help you out. And with that, that's a wrap for this episode of the Indie Investor Pod. And we will see you guys next time. Take care.